Hi guys, Gordon Hanks here with Team Hanks of Berkshire Hathaway Home Services. Today we're going to go in and talk to an old friend of mine. Well, actually she's a young old friend, but she's a good one. This is Jeannie with Award Home Loans, mortgage broker. Jeannie, can you tell people a little bit more about what you do?
So as a mortgage broker, my job is to match the client to the product. And I don't just have one bank's products available. I have a wide range of wholesale lenders that have varying underwriting guidelines, different products that one lender might specialize in over another as far as pricing or their ability to close that certain loan. And so I really like to meet with my clients, find out what their financial goal is, what the mortgage would fit them best, and then we find the lender that gives them the best deal on that particular product.
Okay, so how long have you been doing this?
I have been doing this since 1998. So what, 21 years.
Wow, you don't even look that old. So can you tell us the difference between a mortgage broker and a financial officer at the bank? What is the difference? What separates those two?
Okay, so there's a couple differences. So banks don't necessarily have to disclose all their fees because of the way we're regulated. Mortgage brokers have 100% transparency. You know where all the money goes. If there's a credit for the interest rate, the borrower gets the credit. If there's a cost for the rate, you see that. Also, if a bank can't do your loan, they just decline you and send you on down the road. If a broker submits your loan somewhere and maybe it doesn't fit, it doesn't fly, we can pull that file back and send it to a different lender. So you can continue to work with the same loan officer, the same contact to find your success in a mortgage.
You know, a lot of the folks that are listening don't even know the basic requirements for what it takes to get a loan these days. Could you possibly spell that out for us and let us know what the basic requirements would be?
Well, it's always important to have a job or a steady income stream. You know, we're looking at what have you done for the last 12 months? What have you done for the last 2 years? If you're fresh out of college and you got a job in the field that you have a degree in, your job seasoning is much shorter. We only need 30 days on the new job if it is in the field that you got the degree for. If you're fresh out of high school and you're going to work and you get a good job and you think you're ready to buy a house, you know, we need you at least 12 months on that job, if not 2 years. But definitely 12 months consistent employment.
So it sounds like lenders have really opened up over the last 10 years.
They have opened up over the last 10 years, and even as interest rates rise, lending guidelines loosen because the margin of risk spreads for the lender and they can soften the underwriting.
Okay, what would you tell somebody who's trying to rebuild their credit? What would be the fastest way to get that done?
Okay, so I personally like to see a borrower with a 620 minimum credit score. So 620 isn't that high when it comes to credit scores, but it shows stability. It makes underwriting easier. If you're a 580 score, you know, let's talk about how we can gain those 40 points to a 620 because your life is going to be a whole lot better there. First off, if you've had financial problems, we want you to be 12 months from your distress cycle. So, you know, when everything is hitting the fan, that's not the time to buy a house. But if everything hit the fan a year ago and you've been okay ever since, it could be time to buy a house. Fastest thing, well, credit scoring, people don't understand how credit scoring works. Credit scores are weighted. The most weighted item on your credit score would be a mortgage. So if you've had a mortgage and you pay on time, it's going to help your score faster than anything. If you have one late payment on a mortgage, it's going to hurt you in bigger numbers than you can ever imagine instantly. The next most important would be installment loans. And so installment loans are like car payments, student loans, any loan that had a beginning balance and an end payoff date. It doesn't revolve. It's like we start on this date and 48 months later it's paid off. Third would be revolving debt, and revolving debt is tricky. Before the mortgage crisis, if you were using your credit at 50% of your available credit limit, you were going to have optimum scoring. After the mortgage crisis, it dropped to 30%. So that means if you have a $1,000 credit card, please don't charge more than $300 on any given billing cycle to get your best credit score. The fourth kind of credit is finance company credit, and it might be 12 months same as cash at a furniture store, or one of the companies whose name has finance in it. Those companies are considered a less than stellar quality source of credit and will actually lower your credit score even if you pay them on time, because they're not considered a quality credit source. The last thing that shows up on credit reports is collections or liens. If it's a lien or a judgment, it has to be gone before you buy a house because they don't want it to lien against the property you're buying. If it's a collection, that's a whole different crazy can of worms. People think, oh, I'm going to pay off my collection and my score is going to go way up. Well, your score will go up, but it's going to take longer than you expected. When you pay off that collection, it says you've had recent activity on a derogatory account, and your score will go down, but then it will rebound up higher than it was before. It just takes a couple months for that to happen.
That's great stuff. You know, we talked earlier today about a strategy that concerned getting a $200 secured credit card, and that seemed like a low impact, low cost strategy to me. Can you tell people about that?
Okay, so credit is like, think about it like a credit party. And if you've had bad credit and you go to the party and you walk in the room and everybody goes, why are they here? He didn't even bring any potato chips. Like, what the heck? That's not a fun party. You don't feel welcome. You don't get the good feelings there. But if you walk in and there's a new guy there and be like, hey, I've known Joe for 6 months. He's cool. Look, he has cupcakes. And everybody's like, oh, okay, Joe, get in here. So credit's the same way. If you've had bad credit and you pull up a credit report and everybody just has something bad to say about you, it's no fun. So you got to have a new guy that's like, no, I like him. He's doing a good job. Look what he's done so far. If you apply for credit and get declined, you will drop your credit score more, because the way the credit bureaus go, they go, oh, look, there was a credit inquiry, no new issue of credit, it must be bad, your points go down. So the surest way to do that, and I like to do it local, credit unions, local bank, where you bank now, ask for a secured Visa. And how that works is generally it's like a 300, some places might do 200 amount. You put that money on deposit in a savings account. It's security for the Visa card, and then you go out and you use it modestly. So if you have a $300 Visa card, you're never going to charge more than $100, and you're never going to pay it all the way off. You're going to leave a baby $5 balance on the thing. So it's always, whenever you would go to have your credit pulled, it will show that it's actively being used, but your revolving debt is not being overused. You're not over that 30% marker to help improve credit score.
Well, it sounds like it's a little bit easier these days for someone to get started buying a home. All they got to do is do a little bit of due diligence and get the basic requirements out of the way. And that doesn't seem like it's too big of a challenge to me.
Yes, that's true. I mean, it's not as hard as it seems, you know, and you'll never get there if you never begin.
Yeah.
The best place to start is to give me a call. We'll go over your situation. You know, I always like to say the math will give us the answers. So we plug in the income, we throw in the debts, we, you know, visit about what the goal is. We figure out, you know, have you been stalking houses online? What price range of house are you looking at? Does that match your budget? What's that payment look like? A lot of times the online payment calculators, they don't calculate in taxes, insurance, and mortgage insurance, or a funding fee. And so, you know, they're always giving you the number with a 20% down payment because it makes it look really appealing when you're shopping online, but it's not necessarily realistic for what it folds out to be when you get to it.
Okay, after hearing this, I'm sure that people are going to come in droves. So why don't you tell them where you're located?
I am located on the hill between Diamond Lake Boulevard and Garden Valley Boulevard. So I'm 1043 Northeast Stevens. It used to be the Put On Athletic building, big green building at the top of the hill. And you can give me a call at 541-440-9889, or you can visit me online at awardhomeloans.com.
Thanks a lot, Jeannie. I really do appreciate it.
My pleasure.
Folks, Jeannie Hughes, Award Home Loans.